Anthony, as Firoz also explained, and going forward with this answer of his only, looking at the way we are seeing the new workforce entering and getting into the capital markets, but they are also experimenting and dabbling in other financial instruments also. Now, this kind of a taxation and rationalizing it across asset classes, what kind of an investment or investor environment we are in right now? And it's not only short term, these kind of changes are going to impact long-term investors also, where obviously, earning from your investments and profit is the main focus for your financial portfolio as well. But then investor trends are also changing. How do you think these particular decisions are taken as per the current market movement or current investor sentiments or trends according to you?
So, Kavita, I personally don't think that tax ever should become the focal point of an investment decision. And to that extent, I think the reaction of the market pulling back from the earlier lows probably understands the fact that you focus on the capital gain possibility and then you focus on the tax and not the other way around, right? So I think fundamentally speaking, given what this budget has done in terms of ingredients for potential capital gain over a long period of time, I think people are more calm by that and probably adjust to the fact that they pay 12.5% versus 10% that they were paying earlier. That's point number one. Point number two, for a lot of first time investors or investors who have started investing in capital market products, I would say over the last 2 or 3 years, I would think that they will probably worry about the tax that they have to pay, or they should worry about the tax that they have to pay 5 or 6 years later, right? Because the only way at these current market valuations that you should be looking at investing is having that kind of time frame in mind. So while it does in the short term seem a bit of a damper, I think if you look at the broader context, it's kind of investor education for free, right? The fact that you don't focus on things like tax, etc. You focus on what the argument for the investment product is. The other point I'd make is that, and Firoz alluded to it, I think there have been some positives for the fund industry in the sense that there's rationalization of the tax or the double tax that was occurring on FOFs, both on international equities as well as FOFs on domestic equities. And I would believe that the change of duty on gold and silver on one hand, and secondly, the fact that as long as you hold 35% of equity in a mutual fund portfolio, your holding period to claim long-term capital gains has dropped from 3 years to 2 years, and it is consistent at 12.5%, which is exactly the same as equity products. I think bring a very valuable alternative to an investor who is grappling with what they would believe are market valuations that would require a rethink. So I think in all told, I would believe that the tax proposals are no cause for alarm. And I think the broader context of the budget would mean that investors who are long-term in thinking will be very, very happy with what the budget today was announced to be.